Hello traders, the title of the video is Practical Elliott Wave DAX-30 Index Waves Analysis as fast as possible. Alright, we're going to analyze the German DAX-30 Index. We will be talking about the ABCDE corrective triangle, and we will be talking about the lower degree and the higher degree Elliott wave analysis. All right, I will be pointing out a specific Elliott wave analysis mistake that usually occur when we are conducting a practical Elliott wave analysis as fast as possible. All right, so from 1991, I'm on a monthly chart, to 2000, the DAX index, the epic for DAX index for the TC2000, those who are using the TC2000, the epic is FDAC-X, Foxtrot, Delta, Alpha, Charlie, X. Alright, so this is the epic for those who are using the TC2000 for DAX-30. So we can see that the German stock index, it was bullish. We have a bullish trend from 1991 to 2000 right here. So I will put a vertical line there. So we have, this is where that bullish trend has ended. After that trending first, we will expect a correction. If you are here, you will be saying that, we have, a zigzag pattern, 1, 2, 3, bringing the price down to this point in time. All right. So also, if you are here, you will be saying that probably the Elliott wave cycle has ended here, that a new trend has begun. So you will start counting Elliott wave like this. You'll say first wave. All right. You'll be saying second wave. Okay. Stay with me, all right? We haven't finished yet, because I want to point out a few things that usually happen when we are conducting a practical Elliott wave analysis. You say third wave, and then you will say this is the fifth wave without any Elliott wave violation. The third wave is not a short-term Moses wave, all right? And the fourth wave is not overlapping the first wave. So you will say that, this is a trending phase. But if you are a subscriber to 24 Elliott wave, you will know straight away that this is not a trending phase, because though we have 1, 2, 3, 4, 5 wave up without any Elliott wave violation, that supposed to be a trending phase did not go above the 138.2% Fibonacci extension level of the prior trend. So if you are a subscriber to our channel, you will know that this move from here, all right, from here to here is not a trending phase as such, though we have 1, 2, 3, 4, 5 way. But if you were here, that's the first thing that will come to your mind. But if you understand more the Elliott wave analysis, you'll know that a new trend must break above the 138.2% Fibonacci extension level of the prior trend. It did not. So we will say that this is the X wave or another part of a correction. All right. So talking about the Elliott wave analysis is one step at a time. This is a clear-cut example here about what I'm talking about all the time. Elliott wave count, one step at a time. Then the price came down 1, 2, or 3. Then we will say, all right, this move 1, 2, 3 is correcting this trending phase. All right. So now we know that this move from here to here is not a trending phase, because it did not go above that critical, 138.2% Fibonacci extension level of the prior trend. That's the pink line on my chart, the horizontal pink line. That's that 138. It did not break above it, therefore we can't call it a trend. So, but if you did not know, you will say that it's 1, 2, 3 correcting this trending phase. Or you may say this is the X wave. At that point in time, you may say that this is the X wave. The X wave is the trending phase that has failed. All right, but now as I always say to traders, okay, one step at a time, and I also use the phrase like this. At this point in time, with the information that we have, that's all we can say. You remember? So you may say, oh, George, you always see that, okay? So you are seeing it, what's happening here, practical Elliott wave analysis. Then again, the price went up, okay? So the price went up again. Am I going as fast as possible? I got 4 minutes left. I need to go faster than this, all right? Okay, then again, 1, 2, 3, up again. So you'll be saying, all right, this is a double retracement, correcting that's supposed to be a trending phase. And again, price came down. Look carefully, my friend. Okay, came down a bit like this, all right? A tiny move rally up. Can you see on my chart? Traders say, don't draw on the chart, label it. Okay, tell me how I can label it with the TC2000, and I will do that, okay? But my apology traded out do not like it that I'm drawing lines on the chart like this. Okay, so then it came down again, 1, 2, 3. So you may say, what's going on? All right, but this is what we are saying about that. We can review our Elliott wave analysis, our preliminary Elliott wave analysis. We don't want to be arrogant, all right? So we count the wave, we put it aside, we say that that's what we can say at this point in time. We also go into the mind of other traders, see it from different angle, all right? So now things are becoming clearer now. Now we can see a clear-cut triangle in place. All right, I'm going to color that triangle in dark green. You see now, today, it becomes clear to us that all these things we were calling X wave, or that thing we were calling a trend wave, trending phase, were not at all. In fact, we have A, B, C, D, E triangle completed right there. The trending phase has started from the red spot here. As you can see, why can I say at this junction that we have a new trending phase? Why? Because now we break above that critical 138.2% Fibonacci extension level of that prior trend. Now we have a new trend that is developing here. All right, so all these moves, you see 1, 2, 3, normally for the internal waves of the ABCDE Elliott wave triangle, in theory, this is what we are talking about, the reality of the market and the theory, all right? But that's why we say do not use the Elliott wave theory as a science, all right? So you normally in theory will say 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 3, 3, 3, 3, 3. Now, how come this one is not 1, 2, 3? You see, how come this one is not 1, 2, 3? What I say to trader, when you have a triangle, pattern, don't worry too much about what is inside the triangle. Give priority to the triangle itself. Is there a triangle? Yes, that's it. That's all you do care about. That's all. But there is one of the reasons why we have 1, 2, 3, 4, 5. You can understand what was going through the mind of trader at this junction here. Traders were expecting a new trend in 2003. So talking about the reference point in 2003, we have the commodity boom, the commodity bullish trend. So most of the stock were bullish. Okay, so here we have 1, 2, 3, 4, 5. The market was expecting a trend. The trend was underway. People were counting way here. They say first wave, second wave. They say now we are in the third wave. We are the fourth wave, and they're expecting a fifth wave. But following our guidelines, we know better that this is not a trend. Why? Because it did not break above the 138.2% Fibonacci extension level of that prior trend. But if you were here, you were saying that it's not that you are wrong, but with that at that point in time, that's all people are looking at. That's what they were expecting. But they have to know better that that critical resistance must be kaput first. All right. So as soon as we see now that we are subscribed to 24 Elliott wave YouTube channel, yes, you can be proud of yourself. All right. All right. So we know better. So we see that we know that. Question mark on this, trending first, supposed to be trending first. So our wave count is never definitive, it's always, preliminary wave count. Even if we do other verification, it's still preliminary wave count. We say, all right, we put it there. Okay, well, let's see what the price itself will print. So today, as now we understand why it's 1, 2, 3, 4, 5 instead of 1, 2, 3. So this is what I'm talking about, the reality of the market and the Elliott wave theory. We have 1, 2, 3, 4, 5 instead of 1, 2, 3 up. Now it came down 1, 2, 3, and it went up again 1, 2, 3. It becomes clear to the market now that no, it's not a trend. So Elliott wave traders came out. They say 1, 2, 3, 1, 2, 3. Here you see how it went down fast because people. This is what we are talking about. The last lap. So everybody sees it now. You see why the E part of the ABCDE is quite fast. That's the last part of the pattern. So the pattern becomes clear to traders here. You see, they see now, they say, here, they see the first leg. It was not very clear. People were expecting a trend here. Now it becomes clear. 1, 2, 3. They say, okay, 1, 2, 3, 4. Now they are expecting the last lap of that ABCDE. So for day trader, I say to you, one of the tricks that you can use, look for pattern, all right, and trade the last portion of the pattern, because that last portion, last part of a pattern will be fast if the market recognizes that pattern. So now here people recognize that ABCDE is underway, everybody's selling. That's why we did not have a clear cut 1, 2, 3. They just saw everybody sold it. They say, I'm not going to wait anymore. The smart money just sold it down. Boom, it's coming here. All right. So now we can count the Elliott wave, all right, as fast as possible. I'm trying my best. I'm under time pressure. So see, first wave. You see the second wave. So here again we start counting waves. So we say, all right, BCDE is completed. Sometimes you may see more. You count, you see 5 prime may go up here and then come back again many times before coming out of the triangle. That's why I say to trader, practically trading, just concentrate on the triangle. Though the theory says it has to be 5, 3, 3, 3. Sometimes you will see more than 5, blah, 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 before it pop out. All right, so now we see first wave, second wave. Now we can say clearly now third Elliott wave. Okay, and now the fourth wave. And here we are, fifth wave. And I say to trader, anytime we call something fifth wave, anytime we call something third wave, anytime we call something first wave, we need to remember all the time that those 3 waves can be extended. So our wave count at this junction will say 1, 2, 3, 4, 5. And again, you look carefully, that supposed to be first wave did not break any resistance at all, failing one of our verification. But we give it a chance, all right? We give it a chance. And as I say to traders, the Elliott wave count is dynamic. If it's not very clear to you, just put a question mark on it, move on. Continue to work with what you got and see whether the price will clarify, okay, the price structure in the future or not. All right. So that, now you see now, okay. So you will see sometime I see on YouTube, sometime Elliott wave practitioner will post Elliott wave. So they will make all sorts of comments and say you are used there, blah 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 blah, because people think that the Elliott wave call is set in a stone. But it's one step at a time. All right. You can quote me on that, all right, if you want to. All right, cheer up, my friend. Don't be too serious, okay? All right. So I'm looking for another caller now, and I'm going to wrap it up soon. I'm looking. What are we now? Okay, use orange already. Turquoise. Okay, use the light green for the. So first wave, second wave, third wave, fourth wave, and fifth wave. So somebody on the monthly chart, you see, I'll talk about, we say that we must always check the higher degree wave count. So if you stop on the monthly chart, we can say that we have 1, 2, 3, 4, 5 wave without any Elliott wave violation, except that our first Elliott wave did not break resistance on the left-hand side. So somebody on the monthly chart will say, all right, George, it looks to me that we have, okay, a flat correction developing. So it came down 1, 2, 3. The first thing that is coming to our mind is that the flat correction is underway on this monthly chart. Do you agree? Let us know in the comment section. So you will be drawing, you'll be applying Fibonacci extension to that supposed to be the fifth wave, and you will be highlighting the 138.2% Fibonacci extension level of that fifth wave right here, and you'll be saying that it looks to me we're going to have an expanded flat correction because the B part of the flat correction is going above the fifth wave. On the monthly chart, it makes sense, yes or no? So if you cannot see the yearly chart, that's all you'll be thinking. And a lot of traders are thinking the same thing. Here you see it break below. Okay, now That's what I was saying to traders. By the way, I want to recommend to traders that are watching this video, all right, if you want to know more about the DAX-30 technical analysis, I have recorded an essential tutorial at the 24 Stock Trader YouTube channel. Feel free to subscribe to that channel so you may know what's going on. If you don't see me on 24 anyway, you know that I'm busy talking loudly, all right, at the 24 Stock Trader YouTube channel. And the title of the video is Mastering Indices Trading, German DAX-30 Stock Index Chart Analysis. Check it out on YouTube by 24 Stock Trader YouTube channel. One more time, the title is Mastering Indices Trading, German DAX-30 Stock Index Chart Analysis. Because I told traders more about this stock index. But now what we are doing, we are conducting practical area wave analysis as fast as possible. Am I going fast today? All right, let me know. Okay. So on the monthly chart, that we can say that we say first wave, second wave, third wave, fourth wave, fifth wave. Feel free to disagree. They say 1, 2, 3, 1, 2, 3. If we stop only on the monthly chart, that will be a mistake, which means we are seeing only a portion of the wave analysis. So what do we need to do? We need to look at the higher degree wave count. We're going to go now to the yearly chart. So now we're on the yearly chart. I have too many lines, so you try to stay focused, all right? On the yearly chart, it looks to me, we may say that, okay, I'm not going to draw on it anymore. Okay, so here we have, we say from here, follow me all the way up here. That's the first wave of a higher degree, and our triangle on the monthly chart is the second wave of a higher degree, and that blah 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 of 1, 2, 3, 4, 5 wave that we are counting on the monthly chart, because it breaks above the 138.2% Fibonacci extension level of the first wave, we will be saying that that is the third area wave of a higher degree. So we'll say first wave of a higher degree, second wave of a higher degree, a triangle. Now from somewhere here going up, we are now in the third area wave of a higher degree. So if we are saying that we have a third area wave of a higher degree, it means that on a monthly chart, the correction that we are looking for is the fourth wave of a higher degree, not a bigger correction. Are you with me? Are you with me? Are you with me? So we were here 1, 2, 3, 4, 5 on the monthly chart. We are talking about a flat correction, blah blah blah. So we will say that that flat correction, all right, if the correction takes place, all right, that correction will form part of the fourth wave of a higher degree before we even see the start of the fifth wave of a higher degree. But now again, is this wave come from here to here? Correct, on a monthly chart. Now by looking at the yearly chart, we can come back now and look on our monthly chart wave count and say, is there any adjustment that need to be done? All right, I will say to them, we will wait a bit more. At the end of this year, 2017, if this candlestick bar got a long tail, then we will say that probably the fourth wave is already underway. We will see. We will see. But so far, it's not easy to confirm on the monthly chart whether the fourth wave is already underway. Looking at the yearly chart also, it's not clear that the fourth wave of a higher degree is already underway. But on the monthly chart, it looks to us that we are having a correction here, or our wave count is not spot on, which means probably one of the impulse wave has been extended or is being extended, so we can look back again on our monthly chart wave count. I will not go too deeply into this because the title says as fast as possible, so therefore the video should not be too long. So I hope I have opened your area wave eye tonight, and this video probably will help you to improve your practical area wave analysis, and most importantly, avoid area wave trading mistakes. At the end of 2017, beginning of next year, we'll come back again and look at the chart and see where is that fourth wave of a higher degree and what is happening here. As I told traders before, I highly recommend to traders that are watching this video to go to 24 Stock Trader YouTube channel. Check out that video that I titled Mastering Indices Trading, German DAX-30 Stock Index Chart Analysis. If you have any question or suggestion, feel free to put in the comment section, and in due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that is another useless recording, let us know by giving us the thumbs down. That will put us under pressure to improve our next recording. If you find it amazing, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Now, this will conclude our discussion today. Practical Elliott wave, DAX-30 index wave analysis as fast as possible in less than 21 minutes. Is that fast for you? Thank you for watching, and speak to you soon.